Um, my presentation today, which we can have some questions at the end if I've got time, so please feel free to put some in the chat as we go, or if possible, we will bring you online to ask questions at the end. But I wanted to imagine a world, what it's like in 15 years from now. And to begin the presentation, I was hoping to show you a brief video imagining the world from different perspectives, and this is from the World Economic Forum.
In the next few years, I expect the digital transformation of life to bring huge changes. Everything from science to healthcare to sensors to robotics.
Whether it's information technology and the acceleration we see in artificial intelligence, you just look across the board and you can see a lot is happening.
It's really the notion of digital technology pervasively impacting every walk of life in every vertical industry on all parts of the globe.
The speed is mind-boggling. What I'm particularly concerned about it is how little the world is prepared for the fourth industrial revolution.
If we are not innovative, if we're not creative enough, it will be very difficult to survive in this century.
Countries in emerging markets should take the lead. Mobile platforms will define how fast the fourth industrial revolution will be embraced by the countries.
It's very difficult to try to bridge the gap between a borderless industrial revolution that's being governed by different policies and regulations in each territory and country.
We're always looking for new technology and how it makes the process more efficient, how it makes the quality higher. But one of the things that it's really creating is a need for those that have a technical background.
52% of the encounters with our primary care physicians were handled virtually. Just a massive change.
The technologies available today to scientists, to clinicians, and to everyday people will impact and change healthcare forever.
Humans and machines are assisting each other, augmenting each other with skills.
Humanity itself will be changed with this superintelligence, and we are at the doorstep of that era.
The world has changed. We can never, ever go back to yesterday.
Mobile device not found. In the next few years, I expect the digital transformation of life.
So it's 2035, and I've finally made it to the top. I'm the fund manager of one of the world's largest property funds. My phone is now more powerful than my entire business server 10 years ago, and I no longer carry anything else. As my screen pops up, I check into my property portal to see what's happened to my portfolio overnight. Nothing major, so I check in with my own online portfolio assistant to see if there's anything new on the market today. Hey Alexa, take me through the new opportunities meeting our investment criteria. Within moments, she says, "Hi Scott, I've scanned all the markets through our predictive analytics and produced the following opportunity summary." Our predictive analytics model is our IP. We have a huge number of data scientists running this tool every day, and we started off by digitizing the past to predict the future. This machine overlays a large amount of data over time to bring together performance and predictions using macroeconomic indicators, global demographic trends, talent hotspots, quality of life statistics, cost of doing business analytics, infrastructure pipelines, and many other key statistics that drive this. We then overlay this with consumer sentiment based on social media tweets, customer spending, mobile phone data, and even driverless cards feeds. You wouldn't believe the amount of information we analyze, from the movement of people to sensors on cars analyzing foot traffic. This algorithm is our IP, and we have it in complete lockdown. I don't even know where it's stored, and I'm only allowed to meet with the data team in a quarantined room. Protecting your data and IP has become like a military mission. Immediately, I start reviewing my 15 new portfolios available today, meeting our investment criteria. Anything that looks interesting, I will pass it over to my acquisitions team, or should I say, my acquisitions person. Of the 15 options, I decide there are 2 worth moving forward with for full due diligence. Our detailed due diligence is stage 2 of our AI, a new set of algorithms that brings together automation with our with outsourced human interaction as required. We call it our 4DD, a 4-tier analysis. Tier 1 is an automated valuation on the proposed portfolio, which is so accurate, it's revolutionized the valuation industry. Not only does it quantify value, but it also assesses the risk in a quantifiable amount that can be offset to our insurance companies directly. Tier 2, a detailed analysis of the contracts in place using a combination of different software to scan the structures available. Occupier covenant analysis using business insights to automatically benchmark their rental requirements with their current company performance and forecasts. Tier 3, analysis of the operational efficiency of the building, monitoring the historical BIM information overlaid with customer satisfaction scores. This ensures that we are able to identify if there are value add opportunities to improve building operations, which can be visualized in real time using virtual reality tools. Tier 4, sustainable analysis of the building, an understanding of the economic efficiencies, and importantly, what the purchase of the building will mean to our impact investing rating. This has significant value to us. All of the above is built on a vast amount of data. I call it the raw material of automation and prediction. Data subscriptions costs was something we once wrote off as a miscellaneous cost to the business. Now it's one of our top 3 most expenses. The results of my 4-tier DD are available within hours, and everything is quantified for feeding into our financial analysis. We still run cash flow analysis, but now assess things based on daily returns and even investment horizons as short as a few weeks. Yields above 2% of history and a 20% basis point return over a few weeks is my bread and butter. Benchmarking has evolved to a whole new level over the last 15 years. Once upon a time, we compared ourselves to IPD and NACREIF, but now we use multiple indices at every level of detail within my cash flow. My investors have full transparency of all the investment activity in real time, and including how much I earn on every single deal. Within hours, we have everything ready for our investment committee, and I pull the team together as we meet virtually to decide on the acquisition or the disposal. We move forward with a click of a button, and all execution is done automatically on our trading system powered by blockchain technology. My fund size is over a trillion in value, and all major services once did in-house, for example, property management, asset management, are completely outsourced to third parties. It cost me a fraction of the price to manage my investments, as I'm doing a revenue share and information share deals with my providers who are incentivized to drive value from me for all my investments. Sourcing capital is purely performance-based now, and fund managers every day monitor my performance, updated and limited to my LP, my limited partners. Not only is my return recorded on scorecards, but impact investing, social awareness, sustainability, and many other factors are also monitored. I close my day meeting with my business partner to discuss our expenses for next year. Once upon a time, our biggest expenses used to be IT, headcounts, and accommodation. Now my top 3 costs are data subscriptions, data security, and technology staff to maintain and improve our fund management platform. Pretty crazy, isn't it? You must be thinking I'm mad, but the real question you need to ask here is is this actually possible? Really a world where computers are not just a tool to our profession, but driving our profession and what decisions we're making. So let's have a quick look at where we are today as we consider whether this is actually possible in a short period of time, like 15 years. So when we look at the PropTech market, the value of investments going into this can vary from different sources. but all in all have shown a significant growth year on year, both from prominent VC companies like SoftBank and also property-specific VCs like Fifth World, Metaprop, as well as institutional investments backing from companies as big as CBRE and PGIM, those ones. So we do know that there is significant growth in that area. If we start to think about the number of prop tech companies, this has evolved significantly as well, which we look at Unisu. They're registered and categorized here. They indicate they have around 8,300 prop tech companies identified globally. My personal belief is the majority of these might be focused on residential real estate, which you'll see later on is a larger portion of the global real estate market. However, there are a number of these companies looking to disrupt the commercial real estate sector as well. When we focus on the investment management world, we already know that there are a number of apps and prop tech software companies that are distinguishing and changing the way we look at different parts of the value add fund management value chain. There are no Google-like game changers at this stage, but there are a few themes where the companies are pursuing and revolutioning the way that we work. Some of the ideas that I mentioned in my prediction, or not prediction, but the possible future we're heading towards involve things like predictive analytics, investment platforms, robotic automation, machine learning and AI, data standardizations, and blockchains. While these are great categories, the key pain points relate to institutional investments. I do like the way that this is categorized here into different sectors. And if we look at the institutional investors area, you'll see that there are a number of the pain point themes here indicate a lack of access to data that limits the world that we're dreaming of in the future. But companies like Peer Street, Roofstock, Cadra, House Canary, and Fundrise are a few startups that are joining some of the veterans of the prop tech industry, the Yardis, the MRIs, and ourselves owning Argus, looking to solve these challenges and take us into the future. At Altus Group, we do have we actually have an annual innovation report, which is based on a global quantitative survey of around 400 CRE C-level or senior executives in the front and back office positions of owner-operators and investors. All these firms represented in the survey have a minimum of 250 million AUM USD under management and represent a total of 2 trillion AUM globally. The survey results highlight a growing trend of CRE firms that are actively investing in prop tech firms and startups who are at the forefront of this innovation. You can see they're broken into categories here, and when it comes to focusing on key problems, it appears that generally firms are hedging their bets across the variety of different categories where the future state of CRE can be changed. These investments, are small elements of that fund management of a fund management firm and what happens on a day-to-day basis. But when you bring each of those elements together and start to bring them talk to each other, you start to see a change in the day of your life within there. So you might be sitting there thinking, all of this is interesting, but I'll be long retired before it really matters. And maybe you'll be right, but I wanted to show you some interesting information about the fintech market and what happened there. So firstly, it's important to understand the size of a target market is pivotal for investors. Real estate provides them with access to the largest asset class in the world. And the value of real estate can be shown here, actually exceeds by almost a third the total value of all globally traded equities and securitized debt put together. And this highlights the important role that real estate plays in the economies of the worldwide today. Real estate affects us on a daily basis, where we live, where we work, and we play. And so how big is this market when we focus on the fintech versus the prop tech space? In essence, we think the fintech space is 45% smaller than the PropTech opportunity or the real estate. While capital contribution figures do vary, some sources have indicated that up to 8 times the amount of investment is going into fintech. So why is this? Put simply, global fund management industries undertook a fundamental restructuring. And if you look at the graph here, it shows the cash flow of active investments versus passive investments over the last 15 years and the trend of change here. In the blue, you'll see that active mutual funds trading being traditional investments. So that's the normal investments where you go through a normal company, while the red is passive investment vehicles like ETFs. So in the middle there, you'll see since 2008, the passive investments have attracted more capital and continue to accelerate to a stage now where active management of these investments are actually in decline. Why? According to Morningstar, data has repeatedly shown that very few active funds have been able to outperform the broader market on a long-term basis, particularly when you take into account the lower management fees of these passive funds. How could that happen? Technology. So what is a passive fund or an ETF? It is run by algorithms. It has limited human interaction. It has low cost of operation, highly scalable business, high investment volumes, low margin business, and ultimately delivers a stable, attractive, risk-adjusted return by using the available market data to formulate investment decisions. In essence, it's proven robust performance along with significant efficiencies. The automation of reduced bond and equity fund fees have dropped by 37% and 40% accordingly when as shown by the graph on the right-hand side here. So what does this mean for PropTech? Well, I'm lucky enough to work with some of the top global accounts at Altus Group, and I've had a look at, I've been looking at some of the top investment firms as well as service providers, and also starting to see some trends changing, but there are some constraints and challenges to operating these sort of investment platforms. They're struggling to structure their data to optimize it and standardize it. There's also limited experience in this data management as we're going through this. They have a variety of software providers working in silos, which have limited integration to be able to bring that together. A number of these systems, legacy systems, are getting old, and obviously you need to upgrade those, but you can't do them all at once. Change management and the culture, changing the way people do things on a day-to-day basis, the workflows and the way of doing things is obviously a challenge to do that. Some firms have are struggling to get the technical skills, and also there's a real focus on short-term return on investments and a lack of achieving those sort of things. And all this is happening in a world right now where fund managers are competing with other asset classes like equities and bonds to increase the allocation to real estate and also increase the transparency of performance so they can compare those assets. And there are some pressure on fees coming into real estate right now too. And that's one of the reasons it's a call to action to embrace some of these technologies. So what are some of the predictions? My predictions, the short term, I do see a continuation of these active asset management requirements. There still is a very much a need for more sector focused and local sector knowledge and locational knowledge, and that's going to continue. In fact, COVID-19 is probably going to highlight the need for that, as we have some important challenges coming up between landlords and tenants, in particular, obviously the retail space, but also the office space, as we see some potential structural changes in those areas. There is a possibility that we might need to repurpose some of our assets. Shifts in these demands and the way we operate might change. So we might need to have more places of collaboration and things, whereby things like shared space companies and collaboration centers look like genuine options for many companies post-COVID-19. So asset managers will continue to benefit from these things, and also the lack of transparency there are in some of the fund performance areas, requiring some of that human intervention. So in essence, whilst we see the structural move in fintech to lower some of these management fees and provide that transparency, these active asset management strategies requiring local expertise, local presence, and local relationships will limit the bold changes that we've seen in fintech over that time. In the longer term, I still see a move towards passive active investments. Fund managers will be more focused on data and driving investment decisions based on what the data indicates. You can already see now that asset management is a role, and the larger service providers are starting to provide more forms of that. When you look at companies like CBRE, JLL, and other large service providers, they're starting to go beyond the traditional property management and facility management services and into asset management and advisory services within them. So fund managers will possess, they'll start to possess the detailed knowledge and information about not only their portfolios, but their tenants, the details, the markets they're invested in, and be able to act accordingly from a distance, maybe even from your home during a pandemic. There's some examples of investments today where investors have identified investments during COVID-19. They've virtually inspected them, completed the due diligence, and negotiated and transacted just from afar. So time is the main variable that distinguishes what the prop tech and the fintech markets might do within here. And when I presented this crazy idea of a future to an ex-investment banker who went through the fintech journey, he said to me that back in his day, the likes of BlackRock, Goldman Sachs, JP Morgan, and the biggest players in equity space all decided that technology trading and analytics was destined to take over, and he described it as a race to the bottom. If we use fintech as an example of what could change, obviously this is a fundamental change over around 15 years. I see the interest in technology and transparency in real estate, but not quite to the same extent. The COVID-19 situation has accelerated elements of traditional investors changing the way they approach investment, but it's also reminded us of the importance to understand the physical asset itself. Until data and transparency improve, the road to fully automated prop tech world will continue to be slow. But it is obviously improving significantly. But if you think about how quickly things can change, unexpected events like COVID-19 can sure change the course of history very quickly. If you just think about the last 5 months, and I'm sure everyone's talked about Zoom and those sort of things, but if you can compare companies like Zoom to the top 7 largest airlines. Now, I'm not suggesting this could happen in investment management and real estate overnight, but it does show that situations can change very quickly. A number of my clients, both traditional investors and service providers, went from 100%, pretty much 100% office work-based to almost pure mobile offices in a matter of 2 weeks. The IT teams were able to very quickly adapt, increase infrastructure, implement tools like Zoom, and break decades of traditional office working and continue from home. Now, whether you like the change or not, the reality is business is continuing within there. Now, as I've mentioned a few times, I can't predict when or if these sort of things, ideas will happen in the future. But what I can recommend, based on my experience working with different global accounts, is that the quantitative world we're living towards is coming, and that you should definitely instigate some strategies right now that could help you considerably in the future. These include, firstly, protect your data and have a strategy for where you want this to go. As they say, failing to plan is plan to fail, and understanding what you want to do with that is very important. Recognize the need for new talents to execute these things, technical people with business knowledge. We are seeing a number of companies employing data scientists and then blended roles between technology and the business, with no real and that's changing the way that we're looking at assets and the way we're looking at doing things. It's important to measure your technology return on investments differently. We're often focused on the short or medium term, but we're going to have multiple metrics. Have short-term metrics, have medium-term and long-term metrics that you're driving towards within there. Don't expect perfection as you build out these systems. Be persistent, but also make sure you learn from your mistakes as you go along within them. Explore new technologies on the market, but do your due diligence. It sounds very simple, but the devil is in the details. And do embrace the details, but don't forget to challenge the status quo. Create your own technology roadmap is something I think is really a trend that's going on now. And share that with your prop tech companies or people you want to partner with. That way you can start to align and start to think about the same direction. And then last but not least, technology is only helpful when it's adopted, and this means change management is essential to success. So I think if you start thinking about these now, it will start to set yourself apart in whatever the short or the long term, what the long term is. And on that note, I'd like to thank you everybody for listening to me around the a vision of the future that may come, may not, who knows, but definitely some short-term elements that for you to think about as you're thinking about your business today and where the world is going. On that note, I want to say thank you. We'll open up some questions, and we do have actually at Altus Group some information on the innovation report, but also other things that that might be helpful in understanding where companies can help now and in the future. All right. Do we have any? I'm trying to look at the event now to see if there are any questions, or is there anyone who wants to jump in and ask a question? I think, as Gary said, feel free to post a question here. I will also be at the Altus Group booth after this, so if anyone has any questions or any other visions of, I'd love to hear where people think the world could be going, yeah, obviously love to understand how your company is approaching some of the challenges of changing towards a future. Marianne, did you want to add someone via video? And please go ahead. I do see a question here from James Brown, actually. How long do you think it will take to create a fund management platform? That is a very open question, obviously. So yeah, it obviously depends on your business, how far how deep your fund management system is. I think it's you know, everybody already has systems in place that are running their fund. Some of them are manual, using human intervention, and some of them are leveraging technology. So I think that the evolution of a lot of this is going to be a continual growth of your systems and bringing all the elements together as time goes on. So I don't think it's going to be a matter of creating a fund management system, but it's more about evolving the current things that you have in place. And that's a big challenge. So I think one of the best things that I talked about, having roadmaps and focus. So there are so many elements to a fund management system, from due diligence to identify opportunities, to workflows running through, once you've done due diligence, running through the actual process of purchasing and positioning that and taking it to the market. So those things are going to, identifying where you have your biggest challenges and identifying where they are and putting a roadmap to focus on the things that are the most important now, but really thinking about where you're going and how that's going to fit into other parts of your system is very important. So I think it's important to really think about your company, where you want to go as a business, but also the roadmap of not only your business plan, but your technology plan and how that's going. And things will change along the way, and you definitely always have to adapt. Could be legal requirements or benchmarking opportunities or things, but it's an ongoing evolution where you've got to identify what's most important to you and then think about how that's going to connect in your roadmap in 2, 3, or 5 or 10 years. Is that a question coming up from Rich? Rich, I can see you. Maybe, nope. I do see a question here around how PropTech will evolve to sustainable development goals. And yeah, look, I'm not an expert across all sustainabilities in different areas. My background's actually in valuation. So a number of the sustainability, goals and objectives, can have an effect on the value of real estate, but you've got to start to see that really coming into the cash flows. So a lot of the cash flows and the properties there. So we are seeing some of the impacts of government intervention in sustainability, like the need for having a higher quality, like government tenants having a higher quality of accommodation requirements, can start to impact the amount of market, how many people in the market are willing to take up space within your building. So there are definitely going to be sustainability laws and development goals that will start to impact the PropTech market from an investment and the value of assets. But they're evolving and changing, and we'll start to see them flow through more and more as we go forward. Just looking through. All right, I think what we'll do is I think we'll wrap it up here. I'll be in the Eltis Group room. It might be an easier place to ask some questions if you have some. We'd love to hear. It's obviously very one way, but it's amazing what we can do in technology and not being together like we were 12 months ago. But really appreciate the team, Gary and the team and everybody for setting up an amazing event and the opportunity to present to you. And wish you all the best for the immediate future, and look forward to getting back to the new normal, whatever that is, as soon as possible, and the short-term future, the medium-term future, and the long-term future, wherever that takes us. Thank you.